Hey everyone, let me ask you something. Do you know if Airbnb or VRBO is actually handling your occupancy taxes correctly? I'd ask about Booking.com too, but given their track record, the answer is probably not. Here's the thing. Occupancy tax compliance for short-term rentals is way more complicated than most people think. We're talking city taxes, county taxes, state taxes. We got cleaning fees, pool heating, damage waivers. All of that can be taxable, and how and when to pay can vary wildly depending on where your properties are located. In this video, I'm going to break down what's taxable, how to register and collect the right amounts, how to file and pay, and I'll share a few real-world mistakes we've seen so you can avoid those moving forward. So first, what are occupancy taxes? In short, they're taxes on the rental of short-term accommodations, usually stays under 30 days, although, and this is unfortunately going to be a theme of this video, it depends. Some places the threshold is actually 90 days. Depending on where your property is located, they might be called transient occupancy taxes, abbreviated as TOT, lodging taxes, hotel taxes, sales taxes, or some mix of those. To make it even more fun, some OTAs will label them something else in your PMS. Once again, looking at you, Booking.com. And here's the key thing. Just because you're listed on a platform like Airbnb doesn't necessarily mean they're being taken care of. Some OTAs will collect and remit taxes on your behalf in some places, but definitely not all in all places. And if you're booking direct, you're generally on your own. For instances where Airbnb normally collects and remits, they don't in Hawaii. Other channels like VRBO can vary depending on how you're connected to that channel and what PMS you're using. And even when they do collect, it's not always set up correctly. So let's talk about what's actually taxable, because this is where a lot of people get tripped up. Some hosts assume it's just the accommodation fare, but you need to add in other items, especially those cleaning fees. We had one client with properties in multiple counties in the state, and they were only charging tax on the nightly rate, not the cleaning fee. That's a problem because the local rules said cleaning fees were fully taxable. Other commonly missed items, pool heating fees, early check-in or late checkout fees, damage waivers, as long as they're non-refundable. Basically, if a guest is paying for it, there's a good chance your local jurisdiction considers it taxable. Now let's talk about registration, because yes, you often need to register with multiple tax authorities. Depending on your location, you might have to file with the city, the county, and the state. Sometimes this is easy. There's an online portal, you fill it out, you're good to go. Others may require some kind of form that can either be submitted via email or mailed in. One thing we've found, the people who work at these smaller locations are incredibly helpful. It's in their best interest for you to set this up right, so when in doubt, just pick up the phone and give them a call. Once you register, you'll typically be given some kind of license number that's included with your filings for that property. Okay, so here's where a lot of people really mess up, is collecting the right amount of tax. Even if Airbnb is collecting some tax for you, that doesn't mean they're collecting everything they should. We've seen plenty of cases where platforms are only collecting state-level taxes and skipping county or city taxes completely. That's why it's so important to cross-check what your platform is collecting against what you're actually supposed to be remitting. Otherwise, you could be stuck in the difference out of your own pocket. And if you're using multiple platforms or direct bookings, you need to make sure every channel is collecting the right amount. We've seen all kinds of setups. For example, in Hawaii, we actually had to go into Airbnb manually and override the tax rates for each property because the default ones didn't match the local laws. Once you've confirmed the channels are collecting the right amount, if you're a property manager, you've got a key decision to make. Will you file and remit taxes on behalf of your homeowner clients? Or will you pass that responsibility on to owners and make them handle it? There's no one-size-fits-all answer, but each option comes with its own pros and cons. Filing for them means more work, but more control and less risk of non-compliance. You don't want a cash flowing property be shut down just because Jim has a beef with the local tax collector. Passing it through to the owners is definitely easier on your end, but other than the non-compliance aspect, you risk client churn. If someone comes along and says taxes, we take care of those for you. We work with property managers on both sides of that decision. It just depends on your business model and how comfortable you are taking care of this. We even have a few that will charge homeowners for the service for them, which is a win-win. Okay, so you've configured your tax rates, checked that they're calculated correctly, Registered with every little town and city you need to. Shout out to Lisa from Wisconsin Del City for walking you through the process. You've decided to pay on behalf of the owners. Wait, now you have to pay these? If you weren't having fun yet, buckle up. Some places want it monthly, some quarterly, some only once a year, and this is just for one property. You might file with the state monthly, but the county quarterly. And some places don't even go by normal quarters. Looking at you, New York. Some let you file and pay online. Other times, you're mailing a form and a physical check like it's 1995. Either way, you want to be 100% sure that what you're reporting matches what you've collected, and that you're keeping records in case of an audit. Don't forget to file any of these, because if you do, they certainly won't forget to charge you penalties and interest. Good luck passing that to an owner on their statement. This all sounds like a lot. It is, but it doesn't have to be your headache. We offer full-service STR tax compliance package. We'll advise you on registration, report taxable revenue, we'll file and remit on your behalf. Most importantly, double-check the tax you collected matches what you owe. That way, you stay compliant, avoid penalties, and don't accidentally pay out of pocket. If you're interested, reach out. We'd love to help. If this video was helpful, give it a like, subscribe to the channel, and drop a comment if you have a specific tax question in your area. Thanks for watching.